What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Jeffrey Donis. How you doing today, Jeffrey?
I'm doing well. Dan, I hope you are.
Thank you. And yeah, you have a twin or something, don't you? Well, I thought, yeah, exactly. So I don't know where they are right now. Do you know where your twin is right now? Actually, more importantly, I want to tell you, I got my very favorite audience member here today, Jeffrey. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate investors, syndicators, buyers, sellers, all that kind of stuff. And why do I do that? Well, part of it is for compliance. It's the law. You have to know. You have to have a substantive relationship with people if you're going to share your 506B deals, which are private syndications that you're not allowed to talk about. So I make sure that I know my guests' level of sophistication, and my real ideas I want you to effectively communicate on the subject of commercial real estate. So before we get too excited finding out Jeffrey's background, Jeffrey, do you want to introduce yourself a little bit?
Yeah, for sure. So I'm based in Durham, out of Durham, North Carolina. I'm a multifamily operator. I work with my two brothers. We've partnered on a little over 1,000 units so far. I originally got started in the single family space when we were college kids. Eventually transitioned out of the single family space into the multifamily syndication space by joining different mastermind groups. But since then, we've been able to do deals with the awesome operators, and we've partnered with them, and now we're taking down our own deals. So it's great to
Excellent.
be here.
Excellent. So then the thing I want to ask you though is, but wait, check your eight. It's actually the audience is five, so it's down over there. I don't know if you can see through your camera into the screen of the viewer, but do they have that red subscribe button or do they have the gray one? Are you able to? Just kidding. Anyway, the main thing is that I got to make sure that you guys subscribe because that stuff matters. But the first thing that I always do in these interviews is I go through the five distinct motivations of commercial investors, and then that way I know why people are doing it. And the first reason that I found some people are up to is they want to preserve their purchasing power. So if you have enough of a nest egg to get the cash flow and make ends meet, then the reason you're going to make your next acquisition is to stave off the damage that inflation does to your purchasing power. So that's why some people are making more acquisitions, but that's not me. My main incentive is trading time directly for wealth. Now, I got a background in technology. Specifically, I opened my CRM agency after working for web.com back in 2011. So that's how I got into real estate. And the reason I've made the pivot to focus on real estate is so that way I'm rewarded in the form of equity that's deployed rather than making these big lump sums in cash and then giving half of it to the government. So that's what I'm up to. But a lot of people, especially when they're younger, they're more interested in taking control of their schedule, fast tracking their retirement, and really that means just working less per year or something like that. Some people are doing that, but they're more inclined. There are others who they want to work and work and work. They've got so much ambition that they want to buy their entire whole hometown, and they're going to keep on working until they're in the 90s. These are fantastic people to have on your team for that exact reason. And the other group that's not going to quit until they're in their 90s are people who've picked a sector of society, or maybe it's the environment or animals. Maybe they want to send people to space. Who knows what it is, but they realize that you have to have a tremendous financial backing or portfolio if you're going to make a real impact on society. So Jeffrey, as far as those five different motivations, what combination of those or which ones jumped out to you as
Yeah.
describing you best?
I would say the last one is the one that one of the top three. The first one as well, in
Mhm.
regards to real estate being an inflation hedging asset, especially with inflation nowadays being so high.
Mhm.
Yeah, I'd say there's two.
All right, awesome. So my next question has to do with the tolerance for risk assessment, and most of it is because I thought that the typical securities attorney question wasn't a very good one. So this one is a fill in the blanks question. There are many popular investment asset classes, but I think blank is too risky. It could be anything. It could be real
Yeah.
estate. It could be non-real estate. What's too risky for you, Jeffrey?
Well, in real estate specifically, I would say right now office space, and then in regards to just speculative assets, I'd say Bitcoin for me right
Mhm.
now is too risky.
I love it. I love it because you don't get paid to own it or anything like that. But in commercial real estate, it's a different deal. So, what I do to make sure that you learn how to effectively communicate on the subject of commercial real estate is I pull out the dandoesdeals.com commercial roll die in every single episode, and I go through every single one so that you know how my guest fits into this
Yeah.
business. So let's talk about each one real quick as fast as I can. A repositioner is an acquisitions person. They're looking at a lot of properties, doing a lot of paperwork. The paperwork is underwriting. That means they're doing the math, okay? They're finding out, is this property in actually making the amount of money that the sellers and brokers are claiming it is? And the repositioners are changing the property. They're figuring out some sort of changes they can make to find upside. That upside might be in the form of getting more advantageous lending from financiers. Financiers are people who only deal with paper and money, okay? So if you have better lending, then the repositioner already has some upside. But usually the first place they're going to look is the operations, stop those Benjamins from going down the toilet. Now, of course, there's more to operations than just collecting rent and mowing lawns and taking out trash and all that kind of stuff. There's a marketing component, which is one of my fortes, and that is to make sure that the vacancy rate stays super duper low. And there are other automations and stuff like that. But quite frequently, because commercial real estate is so competitive, that's not going to be enough. So often they're going to need a contractor team to do what's called a value add or renovations to the units. And the idea then is the next tenant will be happy to pay more money in rent than the previous one. But if the repositioner has the same problem I do, which is I'm from the internet, so I need locals. Every time there's an acquisition, you need boots on the ground, somebody who is nearby, can be there in an hour or something like that, because I'd still be stuck at the airport. But when a repositioner turns around to the financier and says, hey, here's my team that's going to take control of this property here, one thing that the financier is going to want to know that I haven't mentioned yet is who's the sponsor KP. Now, a lot of coaching programs, they kind of gloss over this part, but the reason why it's important is you will not be eligible for a commercial loan unless you have somebody in the fold who already owns a similar asset. Okay. On top of that, you need a certain amount of liquidity, and you also need a balance sheet of at least the amount of the loan. But if you got all those pieces, you've got yourself a commercial real estate deal. So, Jeffrey, you already mentioned that you're operators. Are there any other faces of the die that you want to mention? Like everybody has some sort of financier, investor relations elements and things like that. But which parts do you guys cover?
Yeah, so I mean, I would say one thing that I don't know if you might have included it in within one of those categories, but property management, if you're going to
Mhm.
be hiring a third party operations, right, right, right. So yeah, I mean, for us, we do pretty much all you just mentioned: asset management, acquisitions, investor relations, asset management, as I already mentioned. So yeah,
Mhm.
pretty much the all of the one things that you covered, we also have in our company as well.
Sweet. And you're in a super duper hot area as far as growth goes. Like everybody's really excited to invest where you are right now all over
Yeah.
the nation. So as far as a buy box go, that's the next part. And
Yeah.
a buy box or ideal property, if you're talking among syndicators, there's three main parts. First one's geography. So which states, which counties, possibly even which neighborhood, it all matters. Second one's going to be the size. We're talking about multifamily, so we're talking unit count. Okay, if you're doing like industrial commercial, then you're talking square footage. But unit count, you're going to have different people dealing with smaller deals than with the bigger ones. But the third one is class. And for reasons, they use the same word for two different things, and it drives me nuts. The first meaning of class, it has to do with how old, like the condition of the building, is it old and beat up, or is it up to date but not really luxurious at all, or is it really lavish? That's one meaning of class. The second
Yeah.
one has to do with the area it's in, so that's the school districts, the crime rate, and stuff like that. But both of them are ranked the same way as in grade school, so there's like A plus, A minus, B plus, B minus, C, and so on. So, Jeffrey, as far as properties where it's easier to say yes and more difficult to say no, what you looking for?
Yeah, for us, we're in, as you mentioned, North Carolina. So I live in Durham. We look in the Triangle area, which include Raleigh, Durham, as well as the Triad, Winston-Salem, Greensboro, and then Charlotte Metro, and surrounding submarkets around that as well. And then we're also looking in Atlanta. As you mentioned, for us, we like to be very close to our properties and our assets. So all of those are within a few hours drive, and obviously a lot shorter of a flight if needed. In regards to the unit sizes, 100 to 250 units. B class if possible, but we're open to C plus, B areas, and the 1980s vintage or newer is what we're looking for moving forward.
Beautiful, beautiful. And then as far as the people who you're eager to work with, it's my favorite part of commercial is like how helpful everybody is. But at the same time, because we all have our own unique skill sets, we're able to help others more than others. Sponsor KPs are the ones who I'm always on the lookout for, just because I've got the background in technology, marketing, social media content, blah 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 blah, all that kind of stuff. So they have the foundations that supports somebody like me, whereas some of the others, they're better suited for getting some
Right.
grunts. So as far as you guys, and if you're doing any 506B deals, don't go enticing investors because the
Right.
SEC hates that. So
Yeah.
who can you help more than anybody else, Jeffrey?
Yeah, I would say any other capital raisers or sponsors who are focused on building their investor databases and are looking for quality sponsors in our markets that are looking for certain deals in our criteria. That's most likely who we would have the most synergy with.
All right, beautiful. And we ended up, I saw you on LinkedIn and
Yeah.
we ended up meeting each other that way. Is LinkedIn the best way to reach you, or is their website better? LinkedIn's great for me. How about you, Jeffrey?
Yeah, LinkedIn works, or our website is www.donisinvestmentgroup.com. You just spell my last name, Donis.
All right, beautiful. And then the last thing I have, it's actually not for you, it's for you in the audience, which is if you are having troubles with feelings like searing pain in your eyeballs and like migraines, it might be because there's a big ugly red button under my left hand and you really should hit it. It doesn't cost you anything and it has a magical power. The magical power is that YouTube might actually start paying for my videos instead of me. And you want that for me, I hope. But anyway, honestly, all it means is that my video might show on your list of suggestions. You can go ahead and ignore those. I just appreciate the fact that you spent this time with me. Just like Jeffrey, I appreciate that you spent the time with me today. This has been great getting to know you a little bit better.
Likewise, Dan, I appreciate your time and your platform. It's awesome. I love what you're doing.
Awesome, thanks. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.